Welcome to Charts This Week. My name's David Linton, I run Updater, and wow, what a week it's been last week in markets. I mean, yeah, it's really quite unbelievable. That day on Thursday evening in the US, we had the Dow really literally fell from just below 10,900 to just below 9,900, 1,000-point fall, and it was over in a matter of minutes, and then we had a sort of 500-point recovery. There was a story that it was erroneous trades and all that sort of thing, but the reality is the market's been spooked. We had big falls just before then, and we can see that after a lovely sort of steady rise in the market, we've now got some very dramatic falls, and of course that does change the picture a little bit, and you know, quite a scary time and lots of bad news flow. But of course, as technicians, we don't really care about the news too much. Here we see the S&P 500 chart. We're still above the cloud, so it's hard to believe, but we are still in a bullish trend on the S&P 500. We're above the cloud, but boy, we're testing, we've been through on the price, we have been below the cloud, and that is the first sign of bearishness. And we did have a temporary breach before, so really this 1100 level on the S&P is the really important mark for us. The previous high of 1150, which you hoped would have become resistance becoming support, that has been broken, so it is quite a bearish sign, but we're not bearish yet because we really need to close below this 1100 level for a couple of days. Here we see the FTSE 100. This is through the cloud. Maybe it's UK election woes, who cares? The fact is the prices are through the cloud on the FTSE, so this is looking quite a bit worse than the US already. Prices through, lagging lines through. We really do need to get back very quickly above this cloud and make this the low point for any hope that this was just a temporary breach of the cloud. So this is looking quite worrying. FTSE is definitely one to watch this week. The interesting thing about FTSE is we did have an upside target of 7,200, the thrust off this low. We've come all the way back. This is starting to look a little bit like a high pole. Have a look in Jeremy Duplessis' book on Point and Figure about what high poles mean, but it is quite a bearish potential pattern building here. And of course, if we close below the point where this thrust target was given, that negates the target, will disappear off the chart, and then we're heading back to the support level. Still in a long-term uptrend on the market on this chart, but really it's with this big pullback. It's the first big column of X's we've had for some time, really since the low last year. And here we see the DAX. Similar story on the DAX, not as bad as the FTSE. We're not through the cloud on the lagging line. It's about where the S&P 500 is, but this again is testing the cloud right now. So really European markets generally have that feel to them, all driven of course by US sentiment, global sentiment. Here we see the euro. We said last week that the euro looked terrible. Well, how right we were. We really did plummet away on the euro, and you know, the fact that we're making these new lows is not good. We might pause for breath for a while, but there's absolutely no sign that the euro is turning around. And the targets on the euro, 102 and 97. So going back to parity to the dollar, hard to believe, but that's what these selling thrusts, uninterrupted thrusts, are giving us these targets. We're going back to where we were several years ago, 2003, 1999, we were sort of at these levels. So we've been there before, we can come back to these levels again, and it really is looking like if we break through this support level at about 125, we are through into new territory on the euro. Looks pretty scary on this chart. And here we see the pound, quite interesting. The sterling has been bearish. We were looking a bit better last week than the euro, but we have been making new lows, so again that's not great. Now we're below, making new lows on sterling. It's looking worrying for sterling. So the big question is, which is the better looking of the two? This is a sterling euro chart, so I've turned it around the other way. This is sterling's value relative to the euro, and here at about 117.50, we've been at the high. We have looks like we're breaking out of this pattern on sterling and the euro. So sterling is still showing relative strength and looks like it might actually run from here based on this pattern. So euro weakness, relative sterling strength. And of course that really, you want to just go and look at the dollar index, and we do see that it is very much about dollar strength against these two currencies. The dollar is the strong-handed currency at the moment, heading north. And here we see oil through on the cloud, really quite key. If we look at the chart here, we really are testing the support level on oil, and it's really through the cloud on the price, and we're really just coming through below the 75 level. Last Friday was really quite scary. Remember, we need to stay below 75 for a couple of days. We had a one-day breach here. We'd want to see oil in the low 70s for 2 or 3 days to be convinced that this uptrend is over, but not a great looking chart there for oil. And if we look at the point and figure targets, we do still have upside targets, 114, 111. What is interesting is that we are hitting this resistance from the high, the 45-degree line. So oil is hitting some resistance at the moment, but really at the moment we do still have the upside targets. The long-term uptrend is still intact, but oil is testing very key levels right now. Gas, just when we thought gas might be basing, it's been testing that base, and really it's looking a little bit worrying. So gas may well fall away again. This may have been a consolidation pattern. The seasonality says that gas should go up till about the end of June, but the reality is that we are testing new lows. So quite scary on gas as well. Not many charts look great. This is the Baltic Dry Index. Here we see this trend is still up. This is one of your great indicators for what's happening in the global economy, and we see here that we are still basing up. We haven't put in a lower low. So demand in China, sort of global demand, this is the chart to look at, and it's still heading up. So that's not looking too bad. And of course, with all the turmoil going on, last of all, we take a little bit look at gold. Gold was through the cloud a couple of weeks ago. We said it looked bullish. It has been rising. We've got a target of 1250 on gold. Looks like we'll take out this all-time high. So gold is one of the few charts that's still looking pretty bullish. That's it for this week. Until next week, happy charting. See you then.